In our last video, we covered the basics about option trading, how it works, the language, and the terminology used. This week, as promised, we're going to delve deeper into option basics with the ultimate goal that you understand and can begin trading options. If you like these videos and they're adding to your trading knowledge, please like and subscribe below. A question I'm always asked is, why trade options instead of stocks? I thought options were more risky. Well, let's talk about the risk first. There is a risk in every kind of trading, and the best way to lessen or minimize the risk is to understand exactly what you're risking and how that risk is calculated. Getting educated in all aspects of option before actually trading will save you a lot of grief later. Once you understand the risk versus the potential gains, making the decision to trade or not to trade is a lot easier. Now back to the question, why trade options instead of stocks? By now you know I like to explain these concepts so a 10-year-old can grasp them. Options are powerful trades once you know how to think and how to structure them to fit the current price action of the market. I'm going to use Google for an example. I actually did this trade a couple of weeks ago. Google had a 20-for-1 split on, I think it was July 15th. The stock was now more affordable for a greater number of traders. Before the split, the price per share was around $2,400 per share. Gulp, that's a big number. But after the split, it was down to $120 per share. I thought traders would hop on and start trading it at the new lower price, but they didn't right away because right after the split, Google was announcing their earnings. After the earnings announcements, however, buyers started buying the stock, and that forced stock prices to start moving up. I had a choice to make, either buy the stock and hold it or trade options. So let's look at the ins and outs of both opportunities. To make the comparison, I'll set some consistent factors up on each trade, like the time we're in the trade and the number of shares traded. So on the stock, if we had bought 100 shares of stock when the price was $110 and subsequently sold it when the price leveled out at $119 per share, we would have gained $9 a share. Now that's an 8.2% gain in just 8 days. That's not bad. In fact, that's darn good. Now we're going to do the same trade on Google, but this time using options. And the reason I picked 100 shares to trade for my examples is options are traded in contracts, and each contract is 100 shares. We're using the same 8-day timeline between the opening and closing of the trade, so we're comparing apples to apples. As you can see, the cost of the option premium to open was $4.10 per share. The stock price went up, and we were able to sell our option to close the trade for $10.75 a share. Our gain was $6.65. Now, recognize that wasn't as big as the gain we had got if we had held the stock. That gain was $9 a share. But let's compare other factors of both trades. The investment for the stock was $11,000. That's $110 times 100 shares. The investment for the option was only $410. That's $4.10 times 100 shares. Guys, that's over 26 times the capital required to trade the stocks. And the percentage gains for the stocks, it was 8.2. But look at the percentage gain for the option trade, 162.2%. Big difference. So point one, options allow you to leverage your money, your capital. Point two, option trading allows for higher gain percentages. Now you see why I prefer trading options. I get more bang for my buck with options, and it doesn't require as much of my investment capital, my hard-earned dollars. If you're just getting started trading, I have a few suggestions for you. Most important, get some solid education about options and trading before blindly putting your hard-earned money on the line. You shouldn't start a journey to learn math in a calculus class. Start with basic arithmetic, functions, and work your way up. Next, start simply. Work your way to the more complicated types of trading. To start, I suggest finding a stock that's going up and buying a call option at the money 30 days in the future. Next, don't trade tips. I think of it as the blind leading the blind. Learn to do your own thinking. Now, this is where good educational classes will help you develop your thinking. And finally, find a mentor. When I started teaching, there were just a few places to go for good, solid education, and even fewer to find a mentor. Now they're everywhere, with more coming in on the scene every day. Now, some are really good, but most aren't. Some are just one-hit wonders who have not even traded through all kinds of market scenarios. I realize when I say find a mentor, it may sound a little self-serving because that's what I am. I've worked with people one-on-one through my webinars for over 12 years, and there's nothing I'm more passionate about than helping you learn to trade and become better traders. To make it easier to try out Investing Buddies, there's a free 2-week trial offer. You can try us out, see if we're a good fit for you. You'll have access to my weekly webinars, my trades and watch list, as well as the online educational videos I spoke of. You try it, you like it, great. If you don't think we're a fit for you, just cancel. No harm, no foul. Hit the link below for your free 2-week trial offer, and I look forward to seeing you in the future, and I want to hear your questions and comments. Thank you so much.